Good morning. I'm about with the morning debrief. The current time is 7:51. It's 18th of November. Okay. Look, a little bit of obviously negativeness over the last night. There's no doubt about it. Basically, the Dow under quite a bit of pressure, down 1.65%. The S&P was down 2%, and the Nasdaq was down 2.15%. I think one of the biggest concerns we're holding at the moment is that. One of the biggest concerns is that the Europe contagion, and that's what it is, a debt contagion, is ruining or harming sentiment, ability for economic growth around the world, and I think as a result of that, people are starting to get a little bit more nervous. The bonds, the barometers for this nervousness come through the yields for the 10-year bonds in Europe. Particularly in France, they all edged up a lot higher last night. Italy's remained high as well, even though the new Prime Minister came out and delivered, I think, a pretty sober outlook for the Italian economy. At the end of the day, there's still going to be a lot of structural changes. This whole contagion could drag on the economy for some time, and as a result of that, people and investors certainly are moving to the sideline, and that probably would suggest that we've got further to go. I think one of the difficult things is that that we've got good numbers out of the States, and I'm encouraged by that. But precedent to those numbers is obviously concerns in Europe, and that to me is one of the primary worries at the moment. Okay, let's run through the bits and pieces, and I guess a bit of news there. Anything, UBS plans to cut 2,000 jobs. You also heard that Citi's group is planning to cut 3,000 jobs as well, global. Of the other bits of news, US bank face contagion risk. I think that is quite a large concern at the moment. US economy, stocks extend losses. There we go. Debt crisis. Tips demand wanes as Europe's fiscal crisis pairs US inflation. That US inflation looks certainly hurt gold a little bit, and I think gold is under a little bit of pressure, but more about that a little bit later. Initial jobless claims fall. Consumers' outlook improves, which is not too bad. Energy, oil falls back below 100, and I think that's all really we've got on that side of it. So anyway, let's have a look at the rest of the summary. US stocks slump on concerns. There we go. Okay, onto the markets. Looking at the world indices, and you can see the Dow closed down 209 points, 1.76%. The S&P was down 2.21. Nasdaq was down at 2.26. Top 50 down, and you can see the numbers all red there. Top 50 down 1.1%, FTSE down 1.56%, CAC down 1.78%, etc. Our local market, and obviously on the future side, obviously also under pressure, and that basically the futures there. We're down 67 points at 4,192. Okay. I guess we've still got concerns there. The concerns that Europe will actually go into recession, again, is weighing quite heavily on some of the commodities. And you can see Brent crude 108, 112, West Texas 99.22, and I think if anything there, Europe accounts for 16% of the daily consumption of crude, and I think that might start to weigh more on the market rather than the optimism and those inventory draws we had on the States. But what it also does, it brings that spread further down, and that's been the trade which has perhaps been one of the good trades of the year. Okay, looking at it, you can see it's just red across the board. Cotton took a big hit back down to 96.48, exceptionally volatile, but you've got to look at the fact that the volatility is certainly there. There's no doubt about it. Wheat, big fall, 6.12, down 4%, and Kansas down 3%. Now that has broken significant trend lines. So if you are long wheat, I'd probably suggest that you move to the sideline and/or reverse positions. I think that probably the best thing is to move to the sideline. Soybeans are down 1.64%, copper down 3.43%, 338. Copper, in my mind, is probably setting itself up for a very protracted bear market. We have mentioned it in our bulletins quite a few times, so any rally to sell, I think, is not a bad move. Gold down $53 or 3%, 17.20. Silver down 6.82%. It has no friends at the moment. Now, if you do look at it technically, and I'll run to the technical chart here, have a look at this move. Now, remember in the bulletin we talked about like an ABC correction, that Elliott wave. If you look at this, that's the bottom here. So that's the top of one wave, B and C. Then if it's a top of this move, then you can see gold trade back to 1680, and if it breaks 1680, then you can see it come to 1600 and maybe even as low as 1500 on this run. So I would be nervous about long positions at the moment in gold. Okay, our systems have been short, and if you follow the tweets, we took on a small short the other day, so quite comfortable with that. Okay, so that's gold. I also want to just throw in the dollar index, 78.52, and as you can see that it's edging high and continues to edge higher. Everyone knows my feeling on that, so I think dollar is right. Aussie's back under pressure, 99.84. Still comes back. Probably expect a lot more losses there. And I guess when you look at it, still quite bearish. Looking at crude, we're well off that top. We break through that trend. We talked about it the other day. And if it breaks out through 98.20, chances are we go lower. And so quite bearish there. Copper, I want everyone to have a bit of look at. Down 3.57%. This move is traditionally quite bullish, okay, for copper. And if it spends time back in this area, this trend, we can probably see losses extend a little bit lower first. But if they take out these losses, then I can see it back down to 290, okay? So let's just see how that unfolds, but certainly looks weak at the moment. Right, I'll also have a quick look at wheat, because as you can see, it's broken through that trend. That is not a very good look. Broken through that trend which started back in June 2010. So, and we're broken through that low there as well. So chances are for me that market continues to fall. Okay, so it continues to go under pressure. Righty-ho, now that's that. Now in terms of economic calendar, what we've got out tonight. There we go. Tonight in the States, the most important leading indicators, and they expect a little bit more rosy. So pretty much that's about it. Do check an eye on commodities because they do look weak. As this contagion in Europe continues to spread, I probably see that people will start to move to cash. Commodities in themselves, you know, don't present a very good picture, and I probably expect to see a little bit further losses across the board there. The picture just doesn't look all that positive at the moment, given the current set that we're dealing with. But that's it from me. Hope everyone has a great day and a good weekend. Good luck tonight, and happy trading.